Hello and Assalamu alaikum, everyone. This is Kashif Kamran, and I welcome you all to the Advanced Audit and Assurance Practice to Pass webinar for exams in December 2020, being organized by ACCA Pakistan. Today is the day two of the webinar. Now, just before starting on with the day two of the webinar, I just need a confirmation from all of you. Can all of you hear me? Is my voice clear to all of you? And can you see the screen in front of you? Okay, that's wonderfully good. So let's start on with the day two of the AAA webinar for exams in December 2020. Now, the agenda of the day two is very important because on the day two today, we will be looking at the practice of the business risk, particularly, and on the sideline of the day two, we will also be spending time on risk of material misstatement, even though I have covered risk of material misstatement multiple times in my previous webinars. Now, day two is important because business risk seems very important for upcoming exams in December 2020. And I thought I should spend a very good time with you on the understanding of the business risk. And within my session today, I will also be spending time on risk of material misstatement. So it will be a very learning session for all of you, and you will have deep insights about your mistakes, about your problems, about your issues when you are attempting a question on business risk or the risk of material misstatement. Okay, now that brings us to the day two, which is about business risk and risk of material misstatement. I will also be connecting the learnings of the day one yesterday, where I was very much concerned about examiner criticism. And towards the end of the day one yesterday, I was focusing on the March 2020 examiner report, and I was discussing with you the examiner report of the March 2020 sitting, where the examiner had some concern about students and how the student puts the answer in the in the exam context. So I will also be connecting the day one with the day two as well, so we have a better learning. Okay, now in terms of the day two today, if you look at my previous webinars, the hyperlinks are shared with you. I have done a webinar on risk of material misstatement in September 19. You can watch that. I have done a webinar on audit risk in March 19. You can also watch that. I have done a webinar on business risk in December 18, and even I have done the audit risk in March 20 webinar. So you have plenty of resources where you can spend time on beside this webinar, and you can explore the risk of material misstatements, audit risk, and business risk from my previous webinar. But in this webinar, I want to explore business risk in a very different manner and in a very useful manner for all of you, so that you gain confidence in attempting a question on business risk. So let's start on with our journey on business risk, and let's see how we need to be good at business risk. Now, particularly for the day two today, what you need to do. There is one article which I will recommend, and these articles and resources are there in the handout section of the webinar. You can see that. You can download these articles and all the documents which is required for the day two. The article for day two is Exam Technique Article Part 2, Risk Assessment. I did recommended you the 5 exam techniques article yesterday. Out of the 5, I will be using the part 2 today, which is about risk assessment. Then the second thing we have to do today is examiner expectation. I want to do with you an analysis of the examiner do's and don'ts carefully, because a lot of time we have no idea about the examiner do's and don'ts when we are attempting a question on business risk, or risk of material misstatement. I will be doing a drilling with you of December 18 question number 1 because that is the most latest published question on business risk. Business risk has also come after December 18, but the paper is not published. So this is the most latest published paper on business risk. So I thought I should be using the most latest one in terms of drilling the business risk question. And as an assignment for you, you will be drilling December 17 question. Now, let's start on with the agenda and let's focus on the understanding of the business risk and all you need to know about business risk right from the day to today. Now, examiner expectations, right? First of all, you should be very clear about the type of question you get in the exam paper. The question on business risk is a very straightforward question, which asks students to evaluate the business risk. Now, that's not a difficult question to understand. There is no complexity in the understanding of this question. Yes, the question which comes on the risk of material misstatement can be complex to understand, and I will be putting emphasis on the risk of material misstatement in the later half of my day to today. So currently, I'm not focusing on risk of material misstatement. We'll spend time on it in the last 1 hour of my session today. But currently, the focus is on business risk. So the requirement is very simple. Evaluate the business risk. It's nothing difficult to understand it, but let's see how we should go about it. Business risk. Let's read the examiner directly to extract the business risk understanding from an examination point of view. I've already recommended you an article, exam technique article part 2. So that will give us the direct perspective of the examiner, what we should be doing in terms of business risk. Now, if I take on my Word file for the business risk analysis today for day 2, I hope you can all see the Word file in front of you for day 2. Right? So if you can see the Word file in front of you for day 2, just a quick confirmation from your side. If you can respond with yes or no. Can you see the Word file in front of you? Okay, that's perfectly good. Okay, now in terms of the Word file, we are starting with the day 2, and the first objective of the day 2 is to look at business risk and the understanding of the business risk, right? Business risk, understanding, and practice. So let's start with that. And in the later part, we will be going with the risk of material misstatement, right? Okay. Now, in terms of the business risk understanding, the very first thing you should know is number 1, source of learning. Where can you learn business risk from? Is there any source from where you can revise your understanding to business risk? Number 1. Number 2, uh, marking scheme. What is the marking scheme of business risk? How many marks will you get when you write one business risk in exam paper? Number 3, how to formulate an answer. How to formulate an answer. When you're writing an answer for business risk, how would you formulate an answer for business risk? How would you be assured that the answer you are writing is a very good answer? And number 4, past papers on business risk. How many past papers can you do on business risk? That's the next phenomena. So 4 things to focus on: source of learning, the marking scheme, how to formulate an answer, and a past papers on business risk. Let's go one by one with each one of them. The very first thing, source of learning. The source of learning, you have your exam technique article. You have your exam technique article part 2, which is on risk assessment. And I will be reading this article in my session today. And there is a wonderful coverage of business risk in this article, right? So if you read this article in a very good manner, there is a wonderful coverage of business risk and the understanding of the business risk in this particular article. So is there a source of learning? Definitely, there is a source of learning. Marking scheme, right? For the marking scheme, if you look at the most latest paper published on business risk, The most latest paper published on business risk, which you can access as a student, is December 18. So what will we do? We'll look at the marking scheme from the December 18 paper. We'll see the marking scheme of the examiner from the December 18 paper to identify how many marks will you be getting per business risk. So we need to be very careful about the marking scheme. So do we have any published paper after December 18? No. So the most latest paper available is December 18. So we will carefully evaluate the marking scheme of business risk from the December 18 paper. How to formulate an answer, that would be my third step today. And I will be guiding you about how to write a good answer, on how to write a good answer. I'll write some answers with you on the screen in front of you so that you can know exactly how you write up a good answer. And then obviously the past papers on business risk, the available papers which you can practice. The available papers, a very old paper, December 2012, question number one. Then another very old paper, December 2014, question number one. Then a paper came in December 2017, question number one, which I have recommended all of you to do as assignments. And then I am doing a question December 2018, question number one in my session today. So I will be doing this in my session, and I recommended all of you to do this as an assignment. But if you want the old papers, December 12 and December 14, and you don't have them, I can share them with you over the WhatsApp group, which have been prepared for the practice to pass session, right? So source of learning, definitely. Marking scheme, I will be going over the marking scheme with you. How to formulate an answer, I will be guiding you about writing a good answer. And then there are available past papers in front of your screen. So I hope you're all mentally ready to start with source of learning, right? So let's first start with source of learning. Let's see what you should be knowing about business risk. So let's first go with source of learning. Source of learning on business risk. So we need to go to the exam technique article, part 2, and this is on risk assessment. Now, when you look at this exam technique article, part 2 on risk assessment, let me put that in front of your screen. And this is already in the handout section, so you can download that from there. Look at this article in front of your screen. I hope you can all read that. This is an exam technique article right here. So this is an exam technique article right here. And this exam technique article is about risk assessment. You can scroll down and you can see over here, it says part 2 risk. Now, this is the page 1 of the article, right? So when you read the article, you have to read the article in full because you are covering audit risk, risk of material misstatement, and business risk. But I need to take you to the particular page where examiner has spent time on business risk. So leave the first page and scroll down. When you scroll down and you come to the page number 2, right? On the page number 2, the very first thing you will find is the definition of a business risk. That is very, very important because a lot of time you don't know the definition and then you don't know how to pick up a business risk. You should be clear about what is the definition of a business risk because this definition will really help you with the understanding of what is a business risk. Just give me 1 minute before I interact with you on the definition of the business risk. I am just interacting with you. I just need to open up the article where I can just interact with you. So just give me 1 minute for that. Okay, I hope you can see the article again in front of your screen. This is the exam technique article part 2 on risk. We were just discussing this, that you need to come to the page number 2. On the page number 2, you will find the definition, right? So you can all see the definition on the page number 2 here. So In terms of the definition on the page number 2, this is the definition, right? You have to read. Let's explore the definition. Okay, now it says a business risk is a risk resulting from significant conditions, significant events, circumstances, actions, or inactions that could adversely affect the entity's ability to achieve its objective and execute its strategy, or from the setting of the inappropriate objectives and strategy. ISA 315. It is giving you a very good mindset about what is a business risk. It says it is a risk which results from a significant condition. It is a risk which results from a significant event, or it is a risk which results from a significant action or inaction that could adversely affect the objective of the organization. Or it could be a wrong strategy of the organization, or it could be setting wrong strategies for the organization, which can be a business risk. So let's explore this definition here quickly because we need to spend time on the past paper. What is a business risk? The ISA 315 is telling us what is a business risk. Let's make that definition concise. The ISA 315 is telling us that a business risk is a risk which arises from which is basically a risk resulting from, it is a risk resulting from, number one, a significant condition, event, or a circumstances, or an action, or an inaction which could adversely affect the objective of the organization. It is a risk, right? It is a risk which results from a significant condition. It is a risk which results from a significant event. It is a risk which results from a significant circumstances. It is a risk which results from a significant action or an inaction, which eventually compromise the objective of the organization, or which eventually affects the objective of the organization, right? Which affects the objective of the organization, Now, you all know the objectives of the organization, right? Every organization has some critical success factors. Now, there can be some significant conditions, events, circumstances. There could be a significant condition could be the COVID-19. The significant condition could be the political environment. The significant events could be a fire in the warehouse. A significant circumstance could be any dramatic changes in the industrial environment, or your competitor becoming very tough, or your rival becoming very tough. You know the business environment, right? The business environment is influenced by the competitors. The business environment is influenced by the political environment, the economic environment, the social environment, the technological environment. At times, the management takes an action, but that is a wrong action. Even a wrong action can affect the objective of the organization. And inaction. At times, there can be a certain inaction that the management has not taken an action which compromise the objective of the organization. So your action might be wrong, or you fail to take an action, inaction, which results into affecting the objective of the organization. Now, what are objectives of the organization? Objectives of the organization primarily includes profitability for every organization, maximization of the market share, maximize market share, reputation, reputation of an organization, growth in sales, stakeholder satisfaction. So there are multiple objectives for an organization, right? Profitability, maximizing the market share, reputation, growth in sales, stakeholder satisfaction, or having a competitive advantage. Having a competitive advantage. right? Obviously, profitability means maximizing the wealth of shareholder. So for every organization like a listed company, for every organization like a company listed on a stock market, you have a desired objective. Now, anything which can impact upon your objectives will be a business risk. Is that clear to everyone? Anything which affects your objectives, right? Anything which affects your objective will be a business risk. A significant condition can affect your objective. A significant event can affect your objective. A significant circumstances can affect your objective. Or a action, a wrong action can affect your objective. Or even a inaction also affects your objective. So is that clear to everyone? So when you are reading a case study in the exam paper, what you need to do as a student. As a student, it's very simple. As a student, your step number one is to read the case. Read the case. And when you're reading the case, your step number two is to identify, or your step number two is to annotate any condition, any event, any circumstances, any action of the management, or any inaction of the management. You need to identify that. And then in the step three, you need to think uh, how will the how will the above affect the business objective. You need to ask a question to yourself. So in the step two, you will annotate any condition, event, circumstance, action, or inaction from the case study, right? And then you will think that if I have annotated a condition, or if I have annotated an event, or if I have annotated a circumstance, why? How will this affect the business objective? Will it affect the profitability? Will it affect the market share? Will it affect the reputation of the company? Will it affect the growth in sales? Will it affect the stakeholder satisfaction? Why? How? So as a student, just step number one. As a student, a step number two. As a student, your step number three. And finally, obviously, your step number four is to formulate an answer. Is to formulate an answer. These are the four steps, right? So is that clear to everyone? So is everyone clear with the definition of the ISA 315? That a business risk is what? And what is the effect of the business risk? Right? So as a student, you need to do the step number one, two, three, four. Right? I hope you're clear, and I'm moving onwards. This is not the end of the business risk, right? We still need to read a lot on business risk before we start with practice. I will be spending another 15 minutes on learning of the business risk before I shift my focus towards the practice, which is more important. Okay, I hope you're all ready. I'm moving on. Okay, you come back to the article, and in the article we were reading, okay, page number 2, right? Now scroll down from the page number 2 and move to the page number 3. Now see on the page number 3, can you see the business risk coming again? So on the page number 2, you got the definition, right? Then on the page number 3, examiner is giving you a better understanding of the business risk. Let's read that quickly, and let's find, is there something critical which we need to understand from this particular page number 3, because that will wrap up our discussion on business risk and will bring us closer to the start of the practice. Okay, now if you look at the page number 3 in front of you, it says business risk for the purpose of exam. So examiner is saying for the purpose of exam, these risks can usually be taught in terms of conditions that may prevent a business from meeting its objective. So in terms of the exam, these are conditions that may prevent a business from meeting its objective, right? We've already covered that. And might include risk to achieving future profits, might include risk to achieving future profits or cash flows or to the business survival. So the examiner is saying the business risk might not be in present or might not be historical, it might relates with your future. Now, when we identified the risk of material misstatement or when we identify the audit risk, do you believe audit risk pertains to an historical financial statement? risk of material misstatement pertains to an historical financial statement. Am I right? Do you all agree with me? Do you believe audit risk and risk of material misstatement relates with the financial statement? And financial statements are historical. But is the examiner telling us that the business risk may only be historical or the business risk may be in future? So can something affects your future profit and be a business risk in exam paper? Can something affects your future cash flows and be a business risk? So can a business risk be in present and future in the exam paper? So examiner is saying that the business risk could be something which affects your what? The examiner is saying further, this is on the page 3, right? This is on the page 3 of the article, and the page 3 of the article is telling us that a business risk can relate with events or conditions which could affect what? Which could affect the future, which could affect the future profitability, which could affect the future cash flows, liquidity, which could affect the future survival of the business. You might think that the business might close down in future, the survival of the business, the foreseeable future. So in the exam paper, will we just be focused on a risk affecting the present scenario of the company, or will we also be focused on risk affecting the future of the company? Waiting for your answers. So will we just be looking at something affecting the present of the company, or will we also be looking at situations in the exam paper which might affect the future of the company? So is everyone clear? So business risk can relate with events or conditions which could affect the future, profitability, cash flows, and survival of business. Do you think profitability is one of the business objective? Agree? Do you believe cash flows is one of the business objective? Liquidity itself is one of the objective, right? Liquidity is one of the objective, right? And survival of the business, the going concern, right? Going concern itself is one of the business objective. I hope you all agree with me. So can you think about them as business objectives, the one coming in front of your screen, right? So further, page 3 of the article is giving us some very good idea about what a business risk could be. Okay, let's move back. Look at the next paragraph. It says, this is simplified explanation, but will help you describe the implication of most of the risk you come across in the exam paper. See, what is the examiner telling you? Examiner is telling you that this will help you describe the implications of most risk you come across in the exam paper. So most of the risk you will face in the exam paper will either link to profit, or will either link to cash flows, or will either link to business survival. So examiner is saying these are very, very important areas, and most of the risk you will come across in the exam paper will focus on the three. Then after the full stop, the examiner says there will be some risk whose explanation is more involved, and you can find examples of these in the past paper. Examiner is saying you can find examples in the past paper. So the more you practice the past paper, the better. How many total past papers you need to practice for business risk? Have I just mentioned that in my lecture today? How many total past papers you have on business risk which you can practice? Just 4, right? So 4 is a big number? No, 4 is a very small number. If you practice 4 out of 4, will you be good on business risk? Will you have good examples of business risk if you practice all the 4 past papers on business risk? So please ensure that you do all the 4 past papers. Look at the next paragraph. The next paragraph tells us, in journal, you are looking for risk in the information that the examiner has presented you within the scenario. Is that right? You are looking for the risk in the information that the examiner has presented you in the scenario. So from where will you identify the risk? From the case study, right? From the information the examiner has given to you, you will be asked to evaluate those risks. At this level, you will not be credited for defining the business risk. So examiner is saying when you are evaluating the business risk, you will not be getting any marks. You will not be getting any marks if you define a business risk, nor you will receive credit for describing what a client should do, to mitigate those business risks. So, will you get any marks for defining a business risk? Will you get any marks for defining a business risk? No. Will you get any marks for telling examiner the mitigation of a business risk? Will the examiner give you any marks if you tell him the mitigation of the risk? No. So, should we spend time on telling examiner the mitigation? Not at all. We should just be telling examiner the risk. So please be very focal here, right? We are getting something very important here. Should not write, should not write definition of business risk, definition of business risk, should not write mitigation of business risk, mitigation of business risk. So what you should do, you should just focus on, your focus should be on, number one, identify a business risk, identify a business risk. Number two, explain why it is a business risk. And number three, its impact on the business objectives, its impact on the business objective. Identify, number one, explain why, number two, and number three tells the impact of the risk on the business objective, and you will be rewarded. Is that clear to everyone? So you're not writing definitions, right? You're not writing mitigations. You will not say, oh, I saw the examiner answer, and in the examiner answer, the examiner was writing the mitigation. Examiner can write mitigations in the answer because the answer is the tutorial guidance. But the examiner in the article is telling you not to write the mitigation. So is the article of an XYZ author, or is the article of the examiner? So you cannot just say, oh, I read the examiner answer, and in the examiner answer I saw the mitigation. What you should do in the exam paper, should you write mitigations in the exam paper or not? What is the examiner telling us? Should we write mitigations? Everyone, should we write mitigations? Not at all, right? Not at all. We should just focus on risk. You should just focus on risk. So your focus is on what? Your focus is on just to evaluate the business risk, not anything else, not anything else, right? So let's move back to the case. Okay, then the remaining is just miscellaneous. You can just spend time if you want to, and see over here the examiner is giving you the marking scheme. On the bottom of the page 3, you can see the marking scheme. Examiner is saying for identifying without any explanation. If you identify the risk, you will get half a mark for identifying. For briefly explaining business risk, 1 mark will be awarded. For briefly explaining the business risk, 1 mark will be awarded. And full marks will only be awarded where a well explained business risk is presented. If you identify a risk, how many marks will you get? Just half. But if you briefly explain it, you will get 1. So that's 1 and 0.5, 1.5. But if you fully explain it in a very proper manner, examiner is saying you will get full marks. How many full marks are there for every business risk? 2. I will just be showing you the marking scheme, right? A good business risk is worth 2 marks. Examiner is saying marks will not be awarded on any speculative risk. You cannot just write speculative business risk. I will be guiding you on that. Your focus is on the risk given in the case study. So you just need to focus on the case study, and you just need to identify the risk from the case study. The last point, avoid speculative risk. Avoid speculative risk. Just focus on the case study. Just focus on the case study and the information given in the case. Don't take any hypothetical assumptions. And the last thing on the business risk is the marking scheme. Let's look at the marking scheme for a business risk before we start the exercise. Marking scheme for a business risk. Now, which is the latest paper available on business risk? December 18, right? So should we look at the marking scheme from December 18 and take that as the right rule for exams in December 20, everyone? So let's explore. I will be giving you examples of speculative when I start drilling my December 18 paper, because when I start the exam paper, then only I can tell you what is speculative and what is information given in the case study, right? So avoid speculative risk. Don't try to find a risk which is not in the case study. Don't assume a risk, right? Don't take an hypothetical assumption. Just be very particular about the information given in the case study, right? Okay, marking scheme. Now, you all know that examiner publishes the answer, right? Now, this is the December 18 answers in front of you. Can you all see this is December 18 answers in front of you? These are December 18 exam paper answers, and all of you have a very good habit of reading examiner answers. I think that is the most important resource for ACCA students, and they believe this is the only source ACCA has published for them, because you don't read examiner reports, you don't read the marking schemes, you don't read the articles, but you do read examiner answers, and that increases your stress level. If you read the examiner answers without reports, without marking scheme, without articles, you will think, okay, this is how much I have to write. Honestly tell me, when you read the examiner answer, how many of you think this is how much we have to write? Which is wrong. Now, your examiner was telling you not to write the mitigation of risk. Now, when you read the answer of the examiner on business risk, you will find examiner writing mitigations. Now, if you just read the examiner answer in isolation, what definition will you take for exam paper? If you just read the answers in isolation, right? If you just read the examiner answers in isolation, what definition will you take to the exam hall? That we should write mitigation. But tell me, is that the right definition or is that the wrong definition? Quick answers. Is that the right? Is that the wrong perspective? So should you read these answers in isolation? Never. Because a lot of time the student believe this is the only source, and honestly, for a student community, these answers is something which inspires the student community, right? I hope I'm right in that. These are your inspirations, right? You dream of writing an examiner answer someday, and you think that the day we write the examiner answer, we will get passed in the AAA paper. And I think that dream will never come true. You should realize that sooner or later. You need to make your own answer, right? You cannot just get inspired with the examiner answer. You need to develop your own point. Okay, now let's see. In this answer booklet, when you go to the last page of the answer booklet, which is the last 2 to 3 pages, I hope you have ever seen this. Look at this. In the last 2 to 3 pages of the answer booklet, for every exam sitting, right? For every exam sitting, you will see the marking scheme, right? This is the marking scheme coming on the last pages. Can you see this December 18 marking scheme? Can all of you see this? And you don't bother to read the marking scheme, you just bother to read the examiner answers. Now, can you see the examiner is giving you the marking scheme for business risk here for the most latest question? And just read yourself the marking scheme given here. I'm just copying the marking scheme from here. This is the marking scheme, right? Read this in orange. Read this in orange yourself. I'm not misguiding you, right? This is given in black and white in the December 18 answer of the examiner. You read answers, but you don't read marking scheme. Okay, can you see business risk marking scheme in front of your screen? And can you just read that in a minute, what I highlighted in orange? And after you read it, just tell me you have read it quickly. I'm giving you 1 minute. Just read what I highlighted in orange and do tell me that you've read it before I do an analysis on it. Okay, so most of you have read, right? what is coming in orange, right? Now, if I just take that exactly on my Word file, what is the examiner telling us? The examiner is telling us that this is the marking scheme of a business risk you have to go through in exam in December 2020, because that's the most latest one available, right? We cannot have another paper. This is the most latest. So the examiner is saying up to 2 marks for each audit risk explained. That is a mistake, right, in the marking scheme. They should have used the word business risk, because right over here, if you see, examiner is putting the heading business risk, and mistakenly under the business risk, he's saying for each audit risk. Should have been the business risk, right? So that's a typing mistake by the examiner. So up to 2 marks for each business risk, right? Do correct that. Up to 2 marks for each business risk identified and explained. Is everyone clear on that? So the maximum marks we will get per business risk is how many? 2. Up to 2 marks for each business risk identified and explained. Marks may be awarded for other relevant business risk not included in the marking guide. Now, examiner is saying, I will reward you marks even for a business risk which is not in my answer. There might be a possibility that you find a business risk from a different perspective in exam paper, and the examiner has not found that. But examiner is saying, I will also be awarding you marks if you find a relevant business risk not included in the marking guide. Relevant, relevant. Can you look at this word relevant? A lot, I think majority of the students don't even know the meaning of the word relevant. Relevant means case study, not hypothetical, not out of the case study. So how many marks we will get per business risk? 2. So 2 marks, right? But then the examiner is saying in addition. Can you look at this word in addition here? Does in addition means extra than 2? Do you agree with me? Does in addition means something extra than 2? Agree or disagree? Can you see this word in addition? What is the literal meaning of the word in addition? Is it extra? Is it extra than 2? So is it included in 2 or is it extra than 2? This is extra, right? This is not included in 2, right? This is extra. So examiner is saying, in addition, I will allow half a mark. So examiner will give you half a mark for relevant trend which form parts of the business risk evaluation, which form parts of the business risk evaluation. So will you get an extra half a mark for relevant trends, which which form part of the answer? Can you get half a mark if that relevant trend does not form part of the answer? Be very critical, right? See, examiner is giving you an example percentage increase in revenue. But if the percentage increase in revenue is used in your answer, then only you will get half a mark. But if you just isolatedly calculated a percentage increase in revenue, but you didn't use that percentage increase in revenue in your answer, will you be awarded half a mark? So will you get half a mark just by identifying the trend, or just when you use that in your answer? Be very skeptical about that, right? See, now what is the marking scheme of a business risk, everyone? So business risk means that for every business risk, how many marks will I be getting? For every business risk, I will be getting identify plus explain, and is equal to 2 marks per business risk, right? Plus 0.5 marks if any trend is identified. If any trend is identified and used as part of the business risk answer. So if any trend is identified and used as part of the business risk answer, if any trend is identified and used as part of the business risk answer, then only. Will you get half a mark in isolation? Or will you get half a mark when you identify and when you use? Look at the two yellows. Look at the two yellows in front of your screen. You identify and you use as part of your answer, right? The relevant trend can be, examiner is giving you examples, right? The relevant trend can be increase in revenue, or relevant trend can be a decrease in profit. So you might find a percentage decrease in profit, and you say the profit of the company has already reduced, and you tell by 10%. So when you are saying the profit has reduced, you can find the percentage of the profit, and you can tell examiner that the profit has reduced by 25%. So you use that, right, as part of your answer. So is everyone clear on the marking scheme of business risk? In journal, how many marks we get for every business risk? 2. But can we get an extra half a mark? So can there be a business risk worth 2 marks? And can there be a business risk worth 2.5 marks? Am I right? So can there be a business risk worth 2 marks? And can there be a business risk worth 2.5 marks? If a trend is included in your answer, right? Is everyone crystal clear on the marking scheme? So is there a source to learn the marking scheme? Is there a source from where you can also revise the marking scheme rather than asking the tutor, can you kindly tell us the marking scheme? So is there a source to revise the marking scheme? So please ensure that you revise the marking schemes from a relevant source. So this is the marking scheme of the business risk, right? So I hope you have knowledge. Now this is the time to start on with the December 18 paper. December 18, question number 1. Let's start it and let's explore business risk. Because right after the break, we need to spend time on business risk, and right after the break, we'll go down with the analysis of risk of material misstatement. Okay, I'm putting in front of your screen the question paper from December 18. Can all of you see the question paper in front of you? Right. For every business risk, you will not have a trend, right? So you cannot say every business risk can be 2.5 marks, because trend cannot be possible with every business risk, right? So there might be a risk worth 2 marks without trend, and with trend it will be 2.5 marks, right? So not necessarily you say, okay, every business risk is worth 2.5 marks, because finding a trend for every business risk will be impossible in exam context, right? Okay, can all of you see the December 18 paper in front of your screen? Okay, that's good. So if you see the December 18 paper in front of your screen right here, you scroll down the December 18 paper, and I told you how to read the exam paper, right? You first read the introductory page of the question number 1, and the introductory page will give you some very important information. And then you read the exhibits, right? I did demonstrated the way of reading the question number 1 in my day 1 yesterday, right? Okay, now you go down and you come to the requirements. Please also watch my day 1 if you missed that, because on the day 1, I did guided you about how to read the question paper. Now, when you come to the question number 1, look at the requirement number A. The requirement number A is to evaluate the business risk. How many marks we have to evaluate the business risk? Just 8. We know the marks on business risk have been very low. Maximum marks which came on business risk has been 10, or in a worst case scenario can be 12. Examiner never give you high marks on business risk, because in the B part, examiner will either give you a risk of material misstatement or the audit risk. So can you see in the B part, the examiner is asking risk of material misstatement for another 18 marks. So business risk always come for less marks, right? But another philosophy with business risk is business risk never comes alone. Whenever you find a business risk question in the B part, you will find a risk of material misstatement, or in the B part, you will find audit risk. I hope that's clear to all of you, right? So we are currently focusing on the A part, which is to evaluate the business risk facing the company, and the marks are 8, right? Okay, now let's do the analysis and start answering the question. Okay, we need to evaluate the business risk, and the examiner says you have 8 marks. Okay, now that means technically, if I just keep the lower side in mind and I just plan myself, when I'm planning, I'll say, okay, I have 8 marks. And on the minimum side, if I divide them by 2 minimum marks, I will reach 4 business risk. But if I find a business risk worth 2.5 marks, if I find multiple risk worth 2.5 marks, automatically I might even write less than 4 business risks. I might wrap up my answer with 3 business risks. So 8 marks technically divided by 2, and we are thinking about writing 4 business risks, right? So is that clear to everyone? So knowing that we need to find 4 business risks from the exam paper, let's start reading the case study and let's see how can we be clever in identifying the business risk. Do you all remember the definition of business risk I formulated with you just 30 minutes ago? That it arises from a event, condition, circumstance, action, or inaction which could adversely affect, right? Now, again, if you have any question and your tutor is not responding to your question because the tutor is busy delivering the webinar, so it is very, very ethical that you put that question on the WhatsApp group. The tutor has made a WhatsApp group for you, right? Or you can at least WhatsApp the tutor, and the tutor will be responding to your question in the next 24 hours, rather than you keep putting that same question again and again, which causes an irritation and a distraction for the tutor conducting the webinar. I hope that's clear with everyone. Okay, so we have 8 marks, two minimum marks, 4 business risks. Let's see how to go about it. Now, once you know how many business risks to write, you should read the case. You should read the case, and then you should identify the business risk. And when you identify the business risk, you should explain why, and you then think of the impact on the business objective. Think about the impact on business objectives. Is that right to everyone? Is that clear to everyone? So is that what we should be doing exactly? We should read the case, we should identify, we should explain why, and we should think about the impact on the business objectives, right? And if we find any relevant trend, we will pick up the relevant trend, right? If any relevant trend identified, if any relevant trend identified, will use that in answer for an extra 0.5 marks. So please plan your answer before you start reading the case study. A lot of time the students don't plan the answer, and that is eventually when you're reading the case study, the reading of the case study becomes useless. Now, one very good thing which I would recommend you can do before we start reading the case study is that when you're practicing at home, right? When you're practicing at home, and suppose you write your own answer of business risk, right? Suppose you're practicing at home, right? You're practicing at home uh, the December 18 paper, for example, question number 1, and you're practicing at home the business risk, right? And you wrote your answer. You wrote your answer, and you wrote your answer for business risk. Now, yesterday I told you that when you write your answer, you should compare your answer with the examiner report so that you know what you did right and what you did wrong. Now, look at the second perspective. When you wrote your answer for business risk and you want to check whether your answer is right or wrong, right? The very first thing you should do is the step number 1 and the step number 2. How would you self appraise your answer? Because not every time you can ask your tutor to check your answer, but you need to have a self appraisal of your answer. How would you assure that the self appraisal you are doing of your answer is right or wrong? In the step number 1, when you want to check your answer, whether your answer is right or wrong, in the step number 1, read the examiner marking scheme and try to try to reconcile the the business risk pointers. Try to reconcile the business risk pointers given in the marking scheme. Try to reconcile the pointers given in the business risk marking scheme with your points, and see how many matches. If the match is if the match is like 50% or more, that's good. That's good, because the examiner was saying not necessarily your entire answer matches with me. right? So look at the step one. I'm just demonstrating all of you the step one, right? Just read the step one for 1 minute and tell me you have read it. And please ensure that it makes sense to you, right? Just read the step number one yourself and tell me you read it and understood it. I'm giving you 1 minute, right? Now it's less than 1 minute. And did you understood it? Read the examiner marking scheme and try to reconcile the business risk pointers given in the marking scheme with your answer, with your points, and see whether it matches. If it even matches like 50, it's good. Am I saying read the examiner answer, or am I saying read the examiner pointers given in the marking scheme? Pointers given in the marking scheme is something different, right? Now, suppose you write a business risk answer and you will go to the examiner answer. Can you see the business risk marking scheme in front of your screen, everyone, which we just read? And under the business risk marking scheme, can you see the examiner pointers here? Can you see examiner pointers here? 1, 2, 3, 4, 5, 6, 7, 8, 9. So how many business risk is the examiner giving you in pointers? 9. How many you have to find? Just 4 to score 8 marks. Examiner will always give you more because the examiner wants to give you knowledge. The examiner is telling you all of them were business risk. All of them were business risk. If you even find 4 of them, I will give you marks. So what is the potential to identify business risk in December 18 paper? A total of 9. Out of the 9, if even four of your business risk reconcile, that's wonderful. So do you need to write 9 business risk for 8 marks? Do you need to write 9 business risk for 8 marks? Answers? No, only 4. Why is the examiner writing 9? Why is the examiner writing 9? He wants to give you, the examiner wants to give you what? The guidance, the knowledge. So when you read the full answer of the examiner, how many business risk will the examiner written in the full answer? How many business risks the examiner has written in the full answer? A total of 9. So any student can get distracted. One student can say, oh, examiner wrote 9 business risks. That means I also have to write 9 business risks. And you are wrong. So can you see the pointers in front of your screen? Have you ever used pointers to reconcile your answer? Ever? Anyone? Has anyone ever used pointers to reconcile answers? I think most of you read the answer, not the pointers. Please make a habit of reading the pointers because pointers are good. If your point matches with the examiner point, that's wonderful. If your point matches with the examiner point, that's wonderful. But your explanation can differ from the examiner explanation because that's the human psyche. So my point should match, right? Right? Is everyone clear? So in the step number one, the point the step number one means your point should match the examiner point. Your point should match the examiner point, rather your answer. Are you getting the point? So your point should match the examiner point rather than the answer, because the way you explain it and the way examiner explains it is different, and you can never match that. Even if I explain something and you explain something, will it match? Never. Even if you explain and your friend explain, will it match? Never. But will the point of your friend and the point of your match? It will. Will my point and your point match? It will. But will the answer match? Never. So what you should reconcile? Should you reconcile your answer with the examiner answer, or you should reconcile the pointer with your pointer? Are you getting my point, everyone? Are you crystal clear on this? So is everyone getting the sense of connecting the pointer with the pointer, connecting the examiner point with your points? Okay, that's good. So will you be doing this in the remaining 5 weeks before your exams? And will you read the examiner marking schemes? Will you read the examiner pointers and reconcile that? So is it something good for you? Okay. And what is the second way to appraise your answer, which I guided you yesterday? The second way to appraise your answer is read the examiner report. Read the examiner report. Read the examiner report for December 18, question number 1, and what see the criticism or rather read the criticism on business risk. Read the criticism on business risk to see whether you have done something, given in the criticism. Did I guided you about this yesterday? Did I guided you this in the day 1, everyone? Right? So read the examiner report. Will you go to the December 18 examiner report, question number 1, and read the criticism on business risk to see whether you have done something given in the criticism? And if you have, will it give you an opportunity to correct for the future exams? So do you understand how you self-appraise your answer? Because a lot of times the student keep running after the tutor, kindly check my answer, kindly check my answer. How can you do a self-appraisal of your answer? Is everyone getting the way of a self-appraisal of the answer? Will you follow this? Is that a good approach? So if you're practicing at home and you write an answer, follow the step number 1 and follow the step number 2, and that will really improve the quality of your answer before you give your actual exam on the 7th of December. Right? So this technique can really change the way you can improve your answer, because a lot of times students find difficulties in improving their answer, and this technique can really improve your answer from the examination perspective. Right. The examiner marking schemes is given right in the answers. You know the answers of the examiner, right, Muhammad Junaid? You can download the examiner answers, and in the last 2 pages of the examiner answer, you will see the marking scheme. So the marking scheme is part of the examiner answers, right? The same document most of the student uses. Okay, so let's start the business risk understanding. Now let's start to solve the business risk, right? I'm taking on the fresh page now, and we'll start to solve the business risk. I will just give you a clue how to write a good answer, and you will continue this yourself, right? Okay, how to write a good business risk answer for December 18 paper, right? Just let's spend time on it. I will be spending 30 minutes on it, just reading and identifying 4 risks. Will be guiding you on that. I've already done a previous webinar on business risk, which will guide you more. And I hope with this webinar and the previous webinar on business risk, you will be formulating a very good answers on business risk. Okay, just going down with reading of the case study. Okay, we need to identify 4 business risks. Let's start to read the case study, right? Of the Redback Sports Company. When you come to the exhibit number 2, which gives us the background information about the company of which we are the auditor. So this background information will help us getting to know the business risk. So I even mentioned this yesterday that the exhibit 2 is very important, because the exhibit 2 really gives you the business background, and this business background will help you identify the business risk. Not only will you find the business risk from a business background, when you go to the exhibit number 3, can you see what's given in the exhibit number 3? The exhibit number 3 contains the financial statements. So do you believe you can even identify a business risk from the financial statements, extracts of the management accounts? So please remember that whenever you are identifying a business risk in exam paper, when you are identifying a business risk, right? And for a business risk, when you are reading the case, you will find business risk from 2 sources. One, from the business background, because the business background will give you the knowledge of the business. And from the knowledge of the business, you can identify the events you can identify the circumstances. From you can find the events, you can find the circumstances, you can find the actions, you can find the inactions from the business background, which can affect the business objective, right? And then you can find the business risk from the financial information given. From the financial information given, because from the financial information, you might get to know the financial position of the company. Now, just an example before we read the business background. Look at the financial statements, right? And just skim through the financial information. Can you see in the financial information there are some potential issues here? One of the potential issue here is the cash. Look at the cash. Do you believe it is worsening the liquidity of the business? Look at the cash. Look at the cash in the 2009 and look at the cash in the last year. Do you believe it's indicating liquidity? Do you believe it's indicating that the business is facing some liquidity problems? So can the analysis of number itself portray a business risk? Can the analysis of number itself portray a business risk? Am I right? Am I wrong? Waiting for your answers. So please ensure that you should analyze the numbers. Analyze the numbers carefully, because if you analyze the numbers carefully, the numbers itself can lead to business risk. Now, do you believe there is a business risk here? That have you found a business risk number one, which is fall in cash? Fall in cash. Do you all agree with this? A fall in cash. How much is a fall in cash? Can you identify the percentage? Anyone have found the percentage of the fall in? Okay, that's wonderful. 75%, right? So there is a 75% fall in the cash balance over the last year. Okay, 75% fall in cash over the last year. Now, if I use the 75% in my answer, will I get an extra half a mark? A 75% fall in cash over the last year. Will this 75% give me extra half a mark, everyone? Okay, so this 75% will give me an extra half a mark. And if I explain the business risk, what is the business risk? If I explain the business risk, I will get another 2 marks for explaining the business risk, right? So this can conclude into a 2.5 marks business risk. Is everyone getting that? So I need to link the fall in cash to the case study. I cannot just comment on fall in cash in isolation. I need to do a proper comment on fall in cash, looking at the case study, rather than I just make a journal point that a fall in cash demonstrates the liquidity problem for the business and the fall in cash has been 75%. This will not give me marks. So suppose if you're writing this as a business risk, right? For example, let's look at the weak answer and let's look at the strong answer quickly. I will do some 3 to 4 efforts like this before the break, and I hope you get a good clarity. Suppose a weak answer. A student found a 75% fall in cash without even reading the case study. Did I read the case study? Did I read the business background? Everyone? Did I read what is happening in the business background? No. But do I know from the financial information that the cash is falling by 75%? So I just look at a cash falling by 75% without even reading the business background, and I started to write my answer like this. There has been a fall in cash balance. There has been a fall in cash balance by 75% over the last year, which demonstrates that the company is facing some liquidity issues. The company is facing some liquidity issues. Full stop. The liquidity issues, if worsen, can bring doubt on the business going concern or can bring doubt on the business survival in future. If, right, not sure, I'm saying if there has been a fall, the liquidity issue, if worsens, can bring doubt on business going concern survival in future. Full stop. So can a business risk be in future? Was that examiner telling us? Right. So this is a weak answer, right? Because you didn't read the case. You just saw, okay, there is a 75% fall, and the 75% fall is a liquidity issue. And because it's a liquidity issue, it will bring a doubt on the business going concern. Now, this is a weak answer. And interestingly, a lot of students are saying your answer looks strong. Now look at my strong answer. If you believe this weak answer is strong, then look at the strong answer and then judge, right? Okay, should we formulate a strong answer? Should we read the case to formulate a strong answer? Okay, are you all ready? Now you all know there is a 75% fall in cash, right? Come back to the case study. Now, knowing there is a 75% fall in cash, just give me 1 minute. Can you see there has been an increase in the capital expenditure over the last year and this year? Last year, the capital expenditure was 20. This year, the capital expenditure is 32 million. So do you see there is a surge in capital expenditure, and can that be one of the reason of the fall in cash balance, the high amount of capital expenditure? Do you all agree with that? Do you believe a capital expenditure is an outflow? A capital expenditure is a pressure on your cash flows? And has the business increased capital expenditure over the last year? Right? Okay, you all agree with that, right? You all agree with that. That's good. Okay. Do you believe the business has taken on more leisure centers here? Look at the number of leisure centers they have last year and look at the number of leisure centers they have this year, right? This business is about leisure centers, right? Do you believe the leisure centers have increased from the last year? Does that mean repair and maintenance cost will go up of the leisure centers? Do you believe repair and maintenance cost will go up for the leisure centers? Okay, the capital expenditure has increased. The number of leisure centers have increased. Now come to the case study, business background. See which business we are talking about. Look at the business. Okay, we are talking about a business which is Redback. Redback operates 20 sports and leisure centers across the country. Each center has a large gym, a swimming pool, a tennis court, and a badminton court, giving the nature of the business. So is it a leisure business which offers you swimming pools and large gyms and tennis courts and badminton courts? And do you believe they need to be maintained for the members to come and enjoy? Will a member likes to come to a bad looking badminton court, a bad looking tennis court, a bad looking swimming pool? Or will a member likes to come to a very bad looking gym where he might get injured, a bad looking swimming pool where he might get injured? So do you believe the nature of business is such that they need a lot of repair and maintenance? Right? Is everyone clear on that? So do you believe the nature of business is such that they need a lot of repair and maintenance, right? The nature of business is such that they need to buy new equipments. Do you believe they need to buy new equipments for gyms? Do you believe they need to regularly invest in the equipments at gyms to keep them up to date for new members to come in? That's wonderful, right? So has the number of members increased for them? Are the members happy with them? Look at the financial information. Look at the number of members. Have the number of members increased from the last year to this year? So are the members happy with the facilities at gym? Are the members happy with the facilities at the swimming pool? Are they happy with the facilities at the tennis court? The number of members are going up. So now can we make a very proper point on the liquidity problems, looking at the nature of the business, looking at the rise in the number of members, looking at the rise in the number of sports and leisure centers? Now see, realistically, see, if I'm writing a strong answer, I will say there has been a fall of 75% over the last year, which demonstrate the company is facing the liquidity problems. I just copy this line and then I write full stop and I start writing after that the company is facing some liquidity issues. Redback is a leisure company, offering gym and is a leisure company offering multiple services to its members. And Redback is a leisure company offering multiple services to its member, and a business like such, and a business like such, and and such a business requires a lot of repair and maintenance to keep its facilities up to date for members to enjoy good services, Such a business, right, requires a lot of repair and maintenance to keep its facilities up to date and to enjoy good services, which can put pressure on cash flows, which can put pressures on cash flows. So, do we know the reason why the cash has gone down by 75%? Do we believe this might be because of the nature of the business? This might be because of a lot of repair and maintenance to keep its facilities up to date for members to enjoy good services, which can put a lot of pressure on cash flows. So, do you believe the cash flow pressure is because of the nature of business? Have we connected that with the case study now? And we can tell examiner further, there has been an increase in capital expenditure. There has been an increase in capital expenditure over the last year, which itself puts pressure on cash flows, Full stop. So is cash flow a business objective? And something putting pressure on a cash flow, is it a business risk? Something putting pressure on a cash flow, is it a business risk? Do you all agree cash flow is a business objective and a pressure on a cash flow is a business risk? Can you tell me how much was the rise in the capital expenditure? Did anyone found the percentage of a rise in the capital expenditure from the last year to this year? 60%? Okay, do you believe 60% was a rise in the capital expenditure? Okay, that's fine. Further, there has been an increase in the capital expenditure over the last year by 60%, which itself put pressure on cash flows. Now see how many percentages I brought here, 75, 60. Did I use them in isolation, 75 or 60, or did I use them as part of my answer? Right? How many sentences I have? How many sentences I have in my answer? Quickly count the sentences, everyone. How many sentences I have in my 2 marks answer? How many full stops I have? I have 1 full stop, then I have a second full stop, then I have a third full stop. So how many sentences I have? 3 sentences. Do you believe 3 sentences is a very long answer? Not at all. It's a very nice answer. Let me tell you, this is a very nice answer. I'm not just self-appraising myself, right? I'm not just self-appraising myself, right? Look at this examiner article, technique article. Can you just read the examiner technique article? Look at this point in front of your screen. Look at this here. Just read this and tell me you understood this, and tell me, did I wrote a very long answer? Look at this. See, examiner is saying for a briefly explained business risk, only 1 mark, and for a well-explained business risk, full marks. So now tell me, do my answer look like a well-explained answer in front of your screen? So is it a well-explained answer? It is, right? So being a well-explained answer, do you expect to be rewarded? You cannot write just like this. You cannot just write like this, the weak answer. Look at the weak answer in red and expect 2 marks. Never. So reconcile. Will you be considering financial information important when you're answering a business risk question? Or will you just ignore financial information? Can a financial information be a source of a business risk? Okay, just quickly down to other points. We have 10 more minutes before break. So let's do some more exercise. Okay, come back to the case study on Redback, and let's read the business background of the Redback company. Okay, now right in front, we were reading. Redback has 20 sports and leisure centers, and they're offering swimming pools, tennis, and badminton courts. Just 1 minute. I missed one point in my answer, and you didn't bother about reminding me. When I was writing my answer, I should have mentioned here, and the business requires a lot of repair and maintenance to keep the facilities up to date to enjoy the services, so on and so forth. You can even mention that the number of facilities have increased from 18 to 20. The business requires a lot of repair and maintenance to keep its facilities up to date, bracket open. Number of facilities has also increased from 18 to 20, which itself will increase the repair and maintenance, right? So you have more facilities this year than the last year. It will bring pressure on your repair and maintenance expenses, and that will again bring pressure on your cash flows. So you can also mention that the number of facilities have increased, right? We just missed that point out, right? Okay, now come back to the case study. Okay, I'm reading from here. Given the nature of the company, given the nature of the company's operation, Redback has to comply with health and safety regulations set by the National Regulatory Authority, and its facilities are regularly monitored to ensure all regulations are followed and for the company to retain its operating license. Do you believe compliance is a very major risk for Redback? If they have a non-compliance problem, will they lose the license? Do you believe the company has to comply with the regulations? And do you believe the license is conditional on the basis of the compliance? Now, can we think about future? That what if the company have a non-compliance in future? Will that eventually results in losing the license? And do you believe license is the business objective? Do you all agree license is a business objective? And do you believe compliance is non-compliance is a business risk? Now, every past paper you do, December 12, December 14, December 17, or even December 18, finding a non-compliance risk is very common in business risk, because every time this is a very favorite parameter of examiner. No, it's not speculation, right? It's given in the case study. The company has to comply with health and safety regulation, and we have to think about risk in future. Currently, is there any non-compliance? No, but in future, can there be a non-compliance? Yes. So health and safety regulations is a case specific point. How can that be hypothetical? How can that be speculations? Okay, next point. Health and safety regulations. Health and safety regulations. See how you formulate a point. Now, when you write under health and safety regulations, you will say Redback has an exposure. Redback has an exposure to compliance risk. Redback has an exposure to compliance, and Redbacks has an exposure to compliance, and they need to follow regulations. They need to follow regulations to ensure they their license their license remain operative. Their license remain operative. If there are any non-compliances, if there are any non-compliances in future, if there are any non-compliances in future by Redback, it might result in a reputational loss for it might result in reputational loss for the company, and moreover Redback may lose its license, which eventually brings a question mark on Redback survival as a business. Survival as a business. See, you need to write the business risk with if when you are taking future. If. We're not sure, right? So we say if. When we are sure, we never use if, right? Right? Now look at my point. Redback has an exposure to compliance and they need to follow regulations to ensure their license is operative. But if there are any non-compliances in future, because in present there are no, it might result in reputational loss for the business. And moreover, Redback may lose its license, which eventually brings a question mark on Redback's survival as a business. Now look at my length of answer above and look at my length of answer below. In the answer above, I was using percentages, which dragged my answer. I used the numbers 18 to 20 number. I used the number 75%. I used the number 60%, which dragged my answer. But still my answer wasn't long. It was just a 3-sentence answer. But downside, my answer is just 2 sentences. And this 2 sentences is giving me a good answer. Is my 2 sentences ambiguous? Is it an ambiguous answer? Is it or is it not? Is 2 sentence giving me an ambiguous answer? I was getting 2.5 marks above, right? And I'm getting 2 marks here because I'm not using any percentages, right? So my answer above was worth 2.5 marks and my answer below is worth 2 marks. So are you getting some exercise on business risk? Are you getting some perspective on difference of writing a business risk answer from a situation to situation? Let's do one more exercise before the break. Come back to the case study. Okay, come to the next paragraph. The company is not listed and therefore does not need to comply with the local corporate governance regulation. Okay, that's wonderful. The company is not listed. The company is not listed. They don't need to comply with the corporate governance regulation. However, the company's chief operating officer and chairman consider it a good practice to have an independent input on the board. So is the company voluntarily adopting corporate governance? Do the chairman and the chief operating officer consider it to be a good practice to have corporate governance in place and to have independent directors, independent input on the board? So even though it's not legal for them, they're still following the corporate governance on a voluntarily basis, which is something very, very good. And there are 2 non-executive directors in Redback. One of the non-executive director is a leisure industry expert. So one of them is a leisure industry expert. Okay. And the second non-executive director is an academic who specializes in organizational behavior and who have written several books on the leisure industry. And he has written several books on the leisure industry. Okay. So both the non-executive directors, do both non-executive directors have knowledge of the leisure industry? Do you agree? Do you disagree? Do you believe both have knowledge of the leisure industry, the non-executive directors? Right? Now tell me, do you believe for a non-executive director to be independent, should they be from the same industry? Or to have a fresh pair of eyes, should you be from a different industry so that you can be more skeptical? You can have a fresh pair of eyes. If you are from the same industry, you might not be very skeptical. You will have knowledge of business, right? You will have knowledge of business. That is a good point. But if you are from the same industry, you will also have distractions. You will be knowing a lot of things. When you know lots of things, do you go deep inside? Or when you don't have knowledge, do you go deep inside? Which is better? You know the familiarity threat with the external auditor, right? External auditor do have a familiarity threat when he serves very long. When the external auditor serves very long, the external auditor has a familiarity threat. So do you not believe that if a non-executive director is from the same industry, he will have a familiarity threat? He knows the industry. Will it distract his work? So if you read the literature of non-executive directors, having a non-executive director from the same industry have its advantages, but also have its disadvantages. So currently, this company is adopting corporate governance on a voluntarily basis, which is good. They have appointed two non-executive directors, which is very good. But both the non-executive directors are from the same industry, which brings a question mark on their independence somehow. Just keep this point on hold and come to the next paragraph here. Redback has a small internal audit department, but they don't have an audit committee. Now, if Redback does not have an audit committee, do you believe in the absence of the audit committee, the internal audit department is reporting to a finance director? Do you believe if the internal audit department reports to the finance director, will it compromise the independence of the internal audit department? Agree or disagree? Now, I will make one point. They have an internal audit department, but that is small and who reports to the finance director, and they don't even have an audit committee, despite the fact they have two non-executive directors, despite the fact they're following the corporate governance on a voluntarily basis. Then why don't they have an audit committee when they're following corporate governance on a voluntarily basis? Now, I will combine these two and make a point. See how would I formulate this into a business risk? Okay, next point. Corporate governance. I simply put a heading corporate governance. So my assessor knows which point am I addressing, corporate governance. And under the heading of the corporate governance, I'll write my answer. I'll say it is a good practice. It is a good practice of Redback. See, I'm appreciating first. It is a good practice of Redback to voluntarily adopt best practices of corporate governance, best practices of corporate governance. It is a good practice of Redback to voluntarily adopt the best practices of corporate governance, comma, however, the companies, however, the internal audit department seems not to be independent. The internal audit department seems not to be independent as they report to finance director. This will limit the scope and function of internal audit department, and any weaknesses or issues in the internal controls at Redback will not be identified properly, or or management will not take timely actions. Even the inaction, right? Even the inaction is a business risk, right? I read the definition with all of you at the beginning of the class today that even an inaction is a business risk. So this will limit the scope and function of the internal audit department, and any weaknesses or issues in the internal control at Redback will not be identified properly because the internal auditor is not independent, or management will not take timely actions on the suggestions of the internal auditor. This uh, this lack of timely actions, this lack of timely actions can cause business inefficiencies, can cause business inefficiencies, can cause business inefficiencies. This lack of timely actions can cause business inefficiencies for Redback. I hope you all understand that controls are good. Controls are important for every business. If controls are working good, it improves the efficiency of the business. But if controls are not working good and the problems in controls are not addressed on a timely basis, it do leads to business inefficiencies. So I hope you all realize that as accountants, as ACCA students, that controls add efficiency to business. Proper controls add efficiencies to business. But if controls are not working properly, or the problems in controls are not rectified on a timely basis, it do leads to business inefficiencies. So do you believe business inefficiencies is a business risk which can affect Redback company? Do you all agree? So yes, you can even think about fraud. You can even think about fraud. You can even think about the reputation of the company. So did I started with appraising the company in the first line? Did I appraise the company in the first line and then criticized? Because the company was doing something good, right? The company was doing something good. I should appreciate the company. But then I was skeptical that even though they're adopting corporate governance on a voluntarily basis, even though they're adopting corporate governance on a voluntarily basis, they seems to have an internal audit department which is reporting to the finance director, which is wrong. This will limit the internal auditor independence. So they should have an audit committee, right? When they have two non-executive directors. Should I give the mitigation to the examiner? Should I tell examiner the mitigation that they should have an audit committee? Will I get any marks for writing the mitigation? No. So am I addressing the issue or am I addressing the mitigation here? So this issue will give me 2 marks. So see, how many marks have I got out of my 8 marks? Technically, 2 plus 2 is 4 and 2.5 is 6.5. So is everyone getting a sense of how you pick issues and write issues? Please ensure you complete the answer on business risk. Please ensure you know the marking scheme on business risk. Please ensure you read the article on business risk. And please ensure that when you raise the points in a business risk answer, you reconcile your points with the examiner pointers. I hope you can continue from this point onwards. On the track I guided you. You will write your answer first. You will compare your pointers with the examiner pointers, and you will then look at the criticism. Right. The business risk should have headings, right? Corporate governance is the first, is the heading. Health and safety is the heading through which the examiner can identify which area you're writing upon. Okay, the heading of this liquidity paragraph can be the cash flows. The cash flow can be the heading, right? Or the cash, only the cash, because the cash was the area we were addressing, right? Yes, Zaid, you can relate that NED from the same industry, lacking independence and lacking independence to business risk. That's wonderful. I will be sharing the Word document in front of your screen on the WhatsApp group. Don't be worried about it. So just before I give you the break, do tell me, have you been able to learn something in the first part of the class today? Have you got some better understanding of business risk? Have you got some clarity on business risk? So, what was the most amazing thing you got in the last 90 minutes in terms of business risk? Please, your quick suggestions, quick answers. Sorry. What was the most amazing thing you got in the last 90 minutes? Okay, the marking scheme was very useful. Okay, the writing techniques was useful. Okay, that's good. Okay, connection with the case, linking the financials to business risk. Okay, that's good. The self-appraising part, you should self-appraise. Okay, the extra half a mark, the extra half a mark. Okay, so that means you learned something, right? So 90 minutes into the webinar, do you believe this was a waste of time? Or did you believe this was really, really, really important that you took this live webinar today and you got some insights about how you should be going about it? Okay, so if you have a very good looking first part, the second part would be much better because we will be focusing on the risk of material misstatement, and I will be focusing on the marking scheme of the risk of material misstatement, because the risk of material misstatement is an area which I've covered several times in my past webinars. So I probably will just give you some examples, will not be solving the complete question, but I'll give you examples to guide you the mistakes the student do in a wrong answer, and I will be giving you the marking scheme. So the second part of the session will also be very, very important, right? So I'm leaving you with a screen in front. So if you want to copy something down, you can. And we're taking a break for approximately 15 minutes. I'll resume back at 10:25 p.m. and we'll spend the last 65 minutes on risk of material misstatement, right? Please do drop your feedback about the session today, which I will just be monitoring during the course of my break. Overall feedback about the session today, right? I would be very much interested in knowing the feedback. So please ensure that you drop your feedbacks, and we're going off to a break for 15 minutes and we'll resume back at 10:25, right? So I'm just putting that on the screen. We're having a break till 10:25 p.m., the Pakistan Standard Time, right? And we'll resume back. Okay, I'm just muting myself, right? Please come back in the class at 10:25 p.m. Okay, welcome back, everyone, after the break. We are into the day two of the Advanced Audit and Assurance Practice to Pass webinar for exams in December 2020. And we just focused on business risk prior to the break. And now, post break, I am focusing on the risk of material misstatement. Now, just before I proceed further, can you all hear me? And can you see the screen in front of you, the day two business risk and ROM? Okay, so if all of you can hear me and you can see the screen in front of you, which is the PowerPoint presentation. So let's start on with the proceeding of the second and the last part of the day two, and let's focus on risk of material misstatement. Now, please ensure that you complete all the business risk questions in the way it has been guided to you, and please do a self-appraisal of your answer so that you have an ability of writing a good business risk answer. Also, please see my previous webinar on business risk. My previous webinar on business risk was in December 18. The hyperlink of that is given to you. So you can utilize this webinar as well as the previous webinar so that you gain confidence on the business risk. Now, moving towards the next agenda, the risk of material misstatement, right? And again, we need to formulate the same things for the risk of material misstatement from an examination perspective. So let's start on with the risk of material misstatement, which is the objective two of the day two. I just need to spell some important things. I will not be practicing on ROM because I have practiced that a lot in my March 20 webinar and even in my previous webinars as well. I just want to give you some extra knowledge, which can be a really add-on, really important add-on for all of you. So the objective now is the risk of material misstatement, or something also known as an audit risk. Okay, now looking at this, the very first thing you should be looking at, again, just like the business risk, is the source of learning. Can there be a source of learning on risk of material misstatement and audit risk? The very important thing is the marking scheme, because the marking scheme is a bit complex and you need to understand that. It's not as simple as a business risk marking scheme. And then more importantly, something yesterday from day one. In the day one, when we were looking at the March 2020 examiner report, and we were looking at the criticism of the examiner in the day one yesterday, examiner was very much concerned about speculative risk versus case specific risk. So I need to do an exercise on that as well, so we can overcome the criticism of the examiner in the March 2020 report, because the examiner was very much concerned that students write a lot of speculative risk rather than case specific risk when they are writing a risk of material misstatement answer. So this is how we should be going about it, and then formulating a good answer. Formulating a good answer, I will just show you some examples of that. Show examples, right? Okay, let's work on it. Now, obviously, the source of learning is the exam technique article, which is part two, which we were just reading prior to the break. The same article covers the risk of material misstatement, and same articles covers the audit risk. So you can read the same article again, but the marking scheme, I'm just guiding you off that. Let's start the journey. Now, the most latest paper we have on audit risk published is the March 2020 paper. So we will utilize the March 2020 paper to analyze the marking scheme for audit risk, and the same marking scheme is for ROM. So let's analyze the marking scheme from the very latest paper. Do we have any other paper beside March 20? No. Can we evaluate the marking scheme from another paper? No. We just have a March 20 paper, the most updated one. So let's use this marking scheme from March 20. This will be the marking scheme for both audit risk and risk of material misstatement, right? So you can use this marking scheme for both audit risk and risk of material misstatement. Let's carefully evaluate the marking scheme. Okay, now if I take you to the March 2020 answers, right in front of your screen, you can see the March 2020 answers as we saw the December 18 answers prior to the break. And you go to the last pages, of these answers, like the page number 13, rather page number 12. And on the page number 12, you can see the marking scheme of the March 2020 paper, and we are looking into it. Okay, now this is the most updated marking scheme, March 2020, right? And we are looking at the audit risk evaluation. Okay, I will give you 1 minute to read it. Can you just quickly read the marking scheme for audit risk, or something known as risk of material misstatement? Just in 1 minute, and tell me you read it so I can do an analysis of that. And again, under the marking scheme, the examiner is giving the pointers of audit risk, which you can do as a self-appraisal. You can reconcile your pointers with the examiner. But just read the marking scheme and tell me whether you read it. And the more important thing is that you understood it. That is more important. Okay, waiting for more messages on you have read it. Okay, that's good. Okay, let's do an analysis of this marking scheme, sorry, which is the most latest one. Okay, I'm just copying this marking scheme from here, and I'm taking the marking scheme from here to my Word file, and we'll do a proper analysis and conclude on it so we can start the next exercise. Okay, just copying this from the paper. Okay, now if you just give me 1 minute so I can just set it up and then start with the analysis. So you have a proper Word file which can be shared with you on the WhatsApp group, right? Okay, now when you look at this analysis here, okay, in the first bullet, the examiner is telling us that when you write an audit risk answer or you write a ROM answer, whatever that is, because both are similar in terms of the marking scheme, up to 3 marks for each audit risk, unless indicated otherwise. Marks may be awarded for other relevant audit risk not included in the marking guide. Did we read the same statement in business risk? Marks may be awarded for other risk not included in the marking guide. So if you identify another audit risk not given in the marking guide, you will still be getting marks. But how many marks? Up to 3 marks for each audit risk. Up to 3 marks. So one of the marking scheme is up to 3 marks, number one. Look at the next one. In the next one, can you see the word in addition? Just like the word in addition we saw in business risk. Can we see the same word in addition here? So is it extra marks? Yes. In addition, half a mark for the relevant trends or calculation which form parts of the evaluation of audit risk. Is that exactly identical to what we just found in business risk? Half a mark for the relevant trend which forms part of your answer. Half a mark extra for the relevant trend or calculations which form part. But look at what is written here, maximum 3 marks. Examiner was not giving you a limit in the business risk, but over here the examiner is saying that how many additional half a mark you can score. Just maximum 3, because the marking in a question when you're finding an audit risk, or in a question when you're finding a ROM, there are so many ROMs, there are so many audit risk, right? So you might find so many percentages, because audit risk connects with numbers, right? ROM connects with numbers, so you might find so many percentages, but the examiner is limiting you. Half a mark for a relevant trend, or half a mark for a relevant calculation, up to maximum of how many marks? Up to a maximum of 3 marks. So how many calculations or trends can be identified if we divide 3 by 1.5, 3 by half? 6. So maximum amount of trends or calculations I can show in my complete answer is how many? 6. But again, for a student, 6 is a very big number here, right? Most of the time, the students are least bothered about finding trends. Most of the time, the students are least bothered about finding a calculation. So if you find a trend, if you find a calculation in your audit risk answer or in your ROM answer, will you get an extra half a mark for that? Will you get an extra half a mark for that? Yes. But how many? How many maximum? I think A strong student will reach 3, but the weak students are least bothered about half a mark. They never know about half a mark. I hope a lot of you must have got to know this half a mark for the first time, that in addition, a half a mark. And then the examiner is saying materiality calculation should be awarded 1 mark each up to a maximum of 4. Materiality calculations will be awarded 1 mark each up to a maximum of 4. So what is the maximum cap for materiality marks? 4. How many materialities can we calculate in total? Everyone, how many materialities can we calculate in total? 4, because 1 mark per materiality to a maximum of 4. Can we calculate 5 materialities? 6, 7? Will the examiner give us 5, 6, 7 marks? No. Examiner will maximum give us 4 marks, right? Now, is the examiner saying in addition 1 mark? Look at the bullet number 3. In the bullet number 3, is the examiner saying in addition 1 mark? No. Can you see in addition in the bullet number 2? But is the examiner using the word in addition in the bullet number 3? No, that means that materiality marks are included within the 3 marks, right? Materiality marks are included within the 3 marks. Now, if you break the 3 marks, if you break the 3 marks per audit risk, per audit risk, or per risk of material misstatement, per risk of material misstatement, per risk of material misstatement, when you break this, there is 1 mark for materiality when you determine the materiality in the exam paper, and when you comment on the materiality, you will get 1 mark. Then there is 1 mark in the 3 marks for the accounting treatment, if you comment on the accounting treatment, because you know that the risk of material misstatement question is flooded with accounting treatments, right? And then the 1 mark is for the risk and impact. Risk and impact together is 1 mark. Now, I will just be telling you what is risk and what is impact, but 1 mark for risk and impact together. That is a breakup of 3 marks. So when will you get 3 marks? When you write materiality, when you write an accounting treatment, when you write a risk and impact together. Now, this will worth 3 marks. But suppose you are writing a business, suppose you are writing an audit risk, which does not have a materiality, which not necessarily, right, every time you have materiality. 1 mark per calculation. Suppose you're writing a business, you're writing an audit risk which does not have a materiality. Will you be getting 3 marks then? Right? Take some examples. Take an example and tell me quickly, right? Take an example and be quick. I'm making a table quickly, and in the table, let's write many risk, right? Uh, in the table, let's write some risk here. Number 1, the company does not have an internal audit department. Will this statement give you 2 marks or 3 marks when you convert this to an audit risk? The company does not have an internal audit department. I hope you are all capable of identifying the audit risk in the company does not have an internal audit department. Okay, will it fetch you 2 marks? Will it fetch you 3 marks? 2, 3. Okay, very good answers. This will give you 2. Yes, 2 marks. Move next. Share-based payment expense is not recognized. Share-based payment expense is not recognized. How will you get 3? Is there a value given for expense? How can you find the materiality of the share-based payment expense? Is the value given? Most of you were saying 3. Is the value given? Only 2 marks, right? No value given. No value given. No value given. The work in progress was valued. The work in progress was valued at $22 million. Now can you get 3 marks? Yes, because you have a value, you have an accounting treatment of a work in progress. Okay, now just be quick here, right? I just need to find a very good solution here. Let me add some rows here. Okay, we got the first 3 marks, right? Did we commented on the materiality for 22 marks? Did we commented on the materiality here? Commented on materiality. And how many marks we have for materiality maximum? Maximum, how many marks we have for materiality? 4. Okay, move to the next point. In the next point, there is a point, government grant. A government grant of $10 million was taken. How many marks? 3. Very good. Do we have a comment on the materiality? Just 1 minute, right? Sorry. Comment on the materiality. Comment on materiality. And you will have the same answer here. Yes. Good. Okay, then there is another point. A loan of $10 million was taken to a loan of $10 million was taken for 5 years. So is there a value of loan, and can you think about the accounting treatment of loan, or can you think about the classification of loan into current liabilities and non-current liabilities, right? So do we have a comment on materiality here? Yes, and move on. Okay, the next point. Suppose there is a point during the year, the company revalued its assets. The company revalued its asset, resulting in a revaluation surplus, resulting in a revaluation surplus, resulting in a revaluation surplus of $15 million. Okay, we get another 3 marks. Okay, then there is another point in the same exam paper. Suppose in the same exam paper, there is another point. A deferred tax asset was recognized at $5 million. Now, how many marks will you get? 3 or 2? Look at the table very carefully. Look at the table very carefully. Have you exhausted your 4 marks on materiality? Yes or no? Have you exhausted your 4 marks on materiality? Everyone, look at this. Look at this. Suppose this is one question, right? Have you exhausted your marks? So if you even calculate the materiality of 5 million, if you even calculate the materiality of 5 million, how many marks will you be getting here? Just 2. Just 2, because materiality marks are exhausted. Because materiality marks are exhausted. Because materiality marks are exhausted. So are you getting what does that mean? 1 mark per materiality to a maximum of 4. Is everyone becoming clear on that? Is everyone becoming clear on that? So suppose you're reading a case study, right? When you're reading the case study, uh, and you comment on the materiality. 1, you comment on the materiality. 2, you comment on the materiality. 3, you comment on the materiality. 4. The next time you find a value, will that value give you 3 marks? No, that value will not give you 3 marks, right? So how many comments on materiality you can do in the full question? Just 4. Now whether you do it on the 4 here, or you skip one of them and you do it on deferred tax, it's totally up to you. I was just going in the order, right? So I just commented on the first 4 and I skipped the 5th one. So can there be a 2 marks risk? Can there be a 3 marks risk? Is everyone clear on that? Right? Okay, and finally, the examiner was telling us, in addition, half a mark for relevant trend or calculation, up to maximum of 3, up to maximum of 3, right? So tell me finally, when you are writing the audit risk, or when you are writing the risk of material misstatement, right? Can there be an audit risk of 3.5 marks? The one which involves materiality, treatment, risk, and impact, plus a relevant trend, or a calculation. Can this be a possibility when you're reading the case study? Can this be a possibility of getting a risk which involves 3.5 marks every one? So is half a mark in addition to 3, or is half a mark included in 3? Tell me, is half a mark included in 3, or is it addition to 3? What was the examiner telling? Definitely it was in addition. And the 1 mark of materiality, was it included in 3 or was it in addition? It was included. Very, very good. Okay. Can there be a risk of 3 marks? Have I given you the 3 marks risk? The one which involves the M, the T, the R, the I, right? Okay. Can there be a 2.5 marks risk? The one which does not have M but have other factors, plus a relevant trend, or a calculation. Can that be a possibility, everyone? Can Are these probabilities right? I'm just working on the probabilities, right? Okay. Can there be a 2 marks risk? Right? The one without materiality, right? Or relevant trend. Just like this one, the company does not have an internal audit department. No accounting treatments, right? So when you are reading an audit risk answer, when you are planning an audit risk answer, right? Can you think about risk which can give you 3.5 marks? Can you think about risk which gives you 3 marks? Can you think about risk which gives you 2.5 marks? Can you think about risk which gives you 2? Right? So is there a diversified marking scheme when it comes to audit risk? Is everyone clear on that? So will this help you in planning your answer? How much audit risk to write? How much ROM to write? Right? Right. A 2.5 marks risk can be any risk in the exam paper, right? Which has a relevant trend but does not have a materiality, right? So any risk you identify in an exam paper where you can quote a number, right? Just like a business risk we were writing, we wrote a business risk for 2.5 marks because we quoted a number in that business risk. Okay, I hope you're all clear on the marking scheme, right? I'm just moving one step above the marking scheme now, and I just want to give you some examples in the context of the examiner criticism. Okay, just come to March 2020 paper. I want to drill something with you. Please listen to me carefully, right? March 2020. I'll be sharing this Word file with you, right? Don't be worried about it. March 2020. I'm just taking it as an exemplar, versus examiner criticism. Okay. Now I'm showing you one thing, right, from the March 2020 paper. Let's see, where is the March 2020 paper? Okay, the March 2020 paper, right in front of your screen, everyone. Right, you go down and you come to the question number 1. And in the question number 1, this was the paper we were using yesterday, right? And the examiner was very critical of the students writing very wrong risk. Okay, look at this question paper in front. It asks us to evaluate the audit risk, and the marks are 24. Now we know in these 24 marks, there might be some audit risk worth 3 marks, 3.5 marks. There might be some audit risk worth 2.5 marks, 2 marks. So it's not like that you say, okay, 24 marks divided by 2, 12. No. Do you think if you are writing 12 audit risk, that's a lot? If one student divides 24 with 2, and finds the answer 12, and you're writing 12 audit risk, do tell me, are you writing too much audit risk in the exam paper? Am I right? Am I right in that perspective? Okay, that's good, right? Now move on. 24 marks of audit risk, and you go down the case study. I want to address one audit risk with you, right? Uh, okay, look at this. Can you all see the intangible asset goodwill here, everyone? Rizwana Raza, we should be writing 12 audit risk. Is that right answer? How can we write 12 audit risk? Is the marking scheme 2 marks per audit risk? Will we be dividing 24 marks with 2? What I was guiding you in the last 15 minutes. Do you believe you are attempting a question on business risk where you divide 24 marks with 2? Because in 24 marks, you will have 3 marks. In 24 marks, you will have 3.5 marks. In 24 marks, you will have 2.5 marks. So ideally, you need to write less than 12 risk. Okay, can you all see the note number 3 in front of your screen, intangible assets goodwill? Can you see the value of the goodwill in the last year, 135? And can you see the value of the goodwill this year, 135? Right? So the same value, right? The same value coming in this year and the same value coming in the last year, 135, 135. Okay, now let's look at the note number 3. Now, when you look at the note number 3, see what is the management telling us in the note number 3. In the note number 3, the management is telling us something very, very important. Can you just read this note number 3 quickly in 1 minute? In front of your screen, this note number 3. And remember, the goodwill value was the same as of the last year. Just read this note number 3 and tell me you read it. Okay. Are we speaking of a group? Are we speaking of a group? Yes, we are speaking of a group, right? So group consists of many subsidiaries, right? And do you believe this goodwill of 135 million consists of goodwill arising on the acquisition of many subsidiaries? 135 million. So the 135 million might be a goodwill of many subsidiaries, right? Which the group have. So tell me, has the group tested goodwill for impairment? Have they not? Is the question telling you something positive here or something negative here? Right now, just look what happens to you as students in exam hall. I'm just taking this line from here, and I want to do one very good analysis here. Okay, just take this line from the examiner question. I pasted it here. Just give me 1 minute to make it right. Okay, this is the note number 3 from the question paper March 2020, and I just posted here, right? Now, we know that the goodwill value has remained same, and it says the goodwill is tested annually for impairment in accordance with IAS 36, and due to the strong performance of the group, no impairment has been recognized. So have they tested impairment? Yes, they have. But at, at the end of the testing, they have concluded there is no need of an impairment. Okay, just quickly agree with me. Has the group reviewed the goodwill for impairment? Have the group reviewed the goodwill for impairment? Yes. But at the end of the impairment, have they concluded there is no need of impairment? Or at the end of the review, have they concluded there is no need of impairment? Right? So has the group done the right accounting treatment by reviewing the goodwill for impairment? this criticism. I hope you remember we were reading this criticism of the examiner yesterday. Okay, I hope all of you can hear me, right? Okay, that's great. I hope you remember this criticism of the examiner we were discussing yesterday. Examiner was telling us a further area that demonstrated a lack of application to the scenario surrounded the impairment of the goodwill performed by the group on an annual basis. A number of candidates discussed the journal treatment of goodwill that is to be tested for impairment on an annual basis, and that the management had not tested impairment and therefore concluding on the financial statement impact that the goodwill is overstated. Do tell me, is this right? Examiner is saying you are wrong. A number of candidates discussed the journal treatment of goodwill that it is to be tested for impairment on an annual basis. Has the management tested it for impairment? Yes. Have they concluded there is no need for impairment? Yes. Then is this a valid answer? Is this a valid answer? Examiner is saying no, this is not a valid answer. Then you come to the next point. It says the question clearly referred to the group correctly performing the annual impairment review. Right? The question clearly referred to the group correctly performing the annual impairment review, but had not recognized impairment due to strong performance, right? Look at the last point. The key issue here was the indicator of impairment within the foreign subsidiary and the impact this would have on the impairment review. Now, because you read the full question before you attempt the answer, even though the group is telling us there is a strong performance, there is one foreign subsidiary which is loss making, and that was the key issue. Now, see, how would you go about this question? Just 1 minute. Okay, now suppose there is a weak student, right? And a weak student who is obsessed with ICE 36 starts the answer. Goodwill is goodwill of $135 million is a fill in the blank percent of the total assets. A fill in the blank percent of the total assets, right? This is how we start the answer, right? Okay, goodwill of $135 million is a fill in the blank percentage of the total assets, full stop. Thus, material to the financial statements. Okay, am I audible to all of you? Can you all hear me? Okay, that's great. Okay, a goodwill of $135 million is a fill in the blank percentage of the total assets, whatever that is from the exam paper. Thus, material to the financial statement, full stop. Then you say goodwill should be annually reviewed for impairment. Goodwill should be annually reviewed for impairment. Goodwill should be annually reviewed for impairment, and as no impairment review, I'm writing the wrong answer, right, which the examiner is criticizing. And as no impairment review has been performed on goodwill, the goodwill is overstated. Okay, is there any distortion in my audio? Because I believe my audio is very clear. If anyone is having any distortion, you please need to log out of the webinar and log in. So anyone who's having a distortion in my voice, you need to log out and log in, because my voice is clear to the majority of the students. And as no impairment review has been performed on goodwill, the goodwill is overstated. And you come happily out of the exam hall expecting that I will get 1 mark for materiality, I will get 1 mark for the accounting treatment, I will get 1 mark for the accounting treatment, I will get another 1 mark for the risk and the impact. And I'm so happy that the examiner will give me, right? Because you are very definite, right? You're saying goodwill should be annually reviewed for impairment when the examiner is saying it has been and no impairment review has been performed when the examiner is telling us that it has been performed. So the goodwill is overstated. Or there is another student who starts this way, and he's a more brilliant student who just studied the SPR paper. He says a goodwill of a $135 million is a fill in the blank percent of the total assets, thus material to the financial statement. Goodwill should be annually reviewed for impairment, and as goodwill should be annually reviewed for impairment. Full stop. Uh, Impairment should be recognized. Impairment should be recognized when there is an indicator of impairment. When there is an indicator of impairment, and when the carrying amount when the carrying amount exceeds the recoverable amount. Full stop. The recoverable amount is the higher of value in use or the fair value less cost to sell. Full stop. And you come finally to, as no impairment review has been performed, the goodwill is overstated. Now, have you wrote a journal accounting treatment which is not linked to a case study? Tell me. These are both examples of weak answer. These are both examples of weak answer. This or this, because you didn't connected it to the case study. Just just visualize both the answers. Everyone. You can read the note number here, which is telling us that the goodwill has been reviewed for impairment, and the impairment review has been performed, and the group is saying that due to strong performance there is no need to recognize any impairment. You read that. Now look at the first answer, look at the second answer. The student in the second answer even dragged the treatment because he was so obsessed with giving SPR recently. He just passed SPR in September exams, and he's appearing for AAA in the December exams. Useless answers. Now look at the strong answer. The student who's writing the strong answer is the one who read the full case study, who read the full case and is very alert in exam hall. He starts in the same manner. Goodwill is material to the financial statement, no doubt about that. You start with the same statement, copy, paste. But after the full stop, he says, it is good that the group has reviewed goodwill for impairment. It is good that the group has reviewed goodwill for impairment, and this is the right accounting treatment. You're appreciating the group. It is good that the group has reviewed goodwill for impairment, and this is the right accounting treatment. However, the stance of the group that the group had a strong performance. The group had a strong performance, and there is no need to recognize impairment is wrong because one of the foreign subsidiary, which is part of the group, right? One of the foreign subsidiary is loss making this year, which is an indicator for review, which is an indicator for review. Now, how do you know there is a loss making subsidiary, which is an indicator for review? Now, see, am I writing in the context of the case? If I take you back to the case study, March 20 paper, where you read about goodwill, and you move down to the exhibit number 4. When you come to the exhibit number 4, you will read in the exhibit number 4 that there is one subsidiary which you recently acquired. Look at this. Read about this subsidiary. It tells us that there is a subsidiary in the group which is projected to make a loss this year. Now, if you have a subsidiary which is projected to make a loss this year, do you all believe this is an indicator of an impairment review? Do you all believe we should recognize impairment of the goodwill pertaining to this particular subsidiary? So when you have a loss-making subsidiary, see how you're connecting the case. And there is no need to recognize impairment is wrong because there is a foreign subsidiary. Because there is a foreign subsidiary, and there is no need to recognize impairment is wrong because there is a foreign subsidiary which is loss making this year, which is an indicator for impairment. Thus, management has wrongly concluded of on no need of impairment, and thus the goodwill is overstated. Now see this answer. Did you connected this answer with that you first appreciated this is good that the group has reviewed? It is good. Then you said that the stance of the group that there is a strong performance and there is no need to recognize impairment is wrong. So you criticize the stance, and then you connected the stance with a foreign subsidiary which is loss making this year. And then you thought because there is a subsidiary which is loss making, that means the goodwill is overstated. Now, tell me, which is a better answer? Writing a journal treatment of impairment, recoverable amount, value in use, and fair value, and carrying amount exceeds the recoverable amount? Writing the journal impairment, or writing impairment in the context of the case study? Which is the wonderful answer out of the three you saw on the screen, everyone? Tell me, are you getting some m- m- mind opener here? Are you getting the mind opener? Because a lot of time, all of you likes to write journal accounting treatment. A lot of time, all of you likes to write journal accounting treatment, and you're least bothered about writing an accounting treatment which is connected to a case study, which is connected to a case study. So, does my answer consist of impairment accounting treatment in the context of the case study? So, how much is this answer worth? 3 marks. I don't have any percentages here, right? So, this is just a 3 marks answer. So now look at the examiner criticism, everyone. Look at this examiner criticism we read yesterday. Just look at this examiner criticism now fully. Just noting the journal accounting treatment with no specific conversion to the case. Are you getting this point, everyone? So will you be thoughtful of writing a relevant accounting treatment which is in context of the case study rather than just producing a journal accounting treatment? Right? Look at a second example from the same paper, March 20. March 20. Come back to this paper. Okay. Can you look at the note number 2 here? Another intangible assets. And this time the intangible asset is the license. Can you see the license last year was 420 and license this year is 580? So is there a note number for the license? Should we read the note number? Right. Now, when you look at the note number for the license, read the note number 2. Just read the note number 2. Tell me what is the problem here. I'm giving you 1 minute for reading the note number 2 on the license. Just read the note number 2. Okay. So do they have license for a fixed period of time? And when they have license for a fixed period of time, should they amortize the license over the useful life? Now, some of the licenses have life of 3 years, some of them have life of 5 years. Can we just amortize all licenses on 5 years? Or should we amortize some on 3 and some on 5? So have we amortized all the licenses on 5 years? Now, if you amortize all the licenses on 5 years, will it reduce the amortization expense or will it increase the amortization expense? If you amortize all the licenses on 5 years, will it increase the amortization expense or reduce? You're all accountants, right? Ramesh, you are an accountant. Decrease. When when you divide it by 5 years, it will reduce the amortization expense, right? Not increase. So is that a risk of management bias, that the management is trying to reduce the amortization expense and increase the profit? Is the management using it as an incentive to increase the profit? So what is wrong here? License. Do we know the cost of the license 580? Can we find the materiality of 580? Can we find the materiality of 580? So when you're writing this point, the note number 2 in exam, just be watchful. When you're writing the note number 2, you will first start with licenses licenses of $580 million is a fill in the blank percentage of the total assets, thus material to the financial statements. You got your first mark, bracket close. Now, after this line, look at a weak student and again look at a strong student. So you know how to adapt. A weak student after the line number 1. The line number 1 will remain the same, right? The line number 1 will remain the same for a weak student and for a strong student. But how will the weak and strong student differ? The weak student will write an answer. The intangible assets should be recognized when, and you write the recognition of the intangible asset. You continue. Blah, 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 whatever that is, right? Full stop. Okay, the intangible asset should be recognized when something happens, right? Full stop. After the full stop, you write, if the intangible assets have a finite life, they should be amortized. They should be amortized over useful life. And if the intangible assets have infinite life, they should be reviewed for impairment. Now tell me, look at this. So far, so forth. Am I writing journal accounting treatment? Just telling how to recognize an intangible asset. Just telling there might be an intangible asset with a finite life. Just telling there can be an intangible asset with a infinite life, right? So am I just writing a journal accounting treatment which has no link to the license given in the case study, which has no link to the useful life of the license? Now the examiner is telling you the license has a useful life, particular useful life. So why telling examiner a finite and infinite? And the strong student will save time, and the strong student will say quickly, the license of $580 million is a fill in the blank percentage of the total assets and thus material to the financial statements, full stop. And he comes directly to the point. The the policy of amortization of licenses is wrong because each license should be amortized its useful over its useful life, and the management cannot assume a 5 year basis as relevant, a 5 year basis for amortizing all licenses as relevant, amortizing all licenses as relevant, full stop. If all licenses are amortized over 5 year basis, it will reduce the amortization expense. It will reduce the amortization expense, and this can be used as a technique for management bias to window dress the financial statements, Thus, due to wrong amortization policy, thus due to wrong amortization policy, comma, the amortization expense is understated, and the licenses as an intangible asset are overstated. Now, tell me, did I wrote an answer which was more connected to the policy of amortization, which was case specific? Look at this answer and look at the answer in yellow where you were just writing a journal accounting treatment. I hope you get some sense out of writing journal accounting treatments, something I even hate and something even the examiner hate. Journal accounting treatments. And you wrote learn accounting treatments. Students are so happy wrote learning accounting treatments. They ask the tutor, do you have summaries of the accounting standards? From where I can revise the accounting standards, because you want to rote learn the accounting standards. Now tell me, which way is better? Should you adapt the accounting treatment in context of the case study to make a brilliant answer? Are you getting some perspective from the note number 2 and the note number 3, which I just drafted in front of you in the live class? Are you getting some sense? Has it been an eye opener for you, note number 2 and note number 3? Has it been an eye opener between how a weak student writes an answer and how a strong student writes an answer? Has it given you something? Will you think that way? You still have 5 weeks before exam. I hope you think that way. So what is the key message here? What is the key learning? The key learning here is, which I keep focusing on every time in my webinar, is number 1, adapt the accounting treatment. Adapt the accounting treatment to the case. Don't reproduce the rote learn accounting treatment. Don't reproduce the rote learn accounting treatment. Don't reproduce the rote learn accounting treatment. Right? Don't reproduce the rote learn accounting treatment. Adapt to the case. Adapt to the case. I've given you 2 examples of adaptation, right? One on impairment, one on intangible assets. I hope you can learn from that. So is everyone clear on the marking scheme of ROM? Is everyone clear of how you get marks on ROM? The capping of the materiality, the marks are capped for materiality. Is everyone clear about you can get an additional half a mark for any calculations used in your answer? Right? So just few last aspects to cover before I wind up my day 2 today. Um, Please ensure that you read the examiner article, which is very, very important, which is exam technique article, which I was just reading for business risk today. And please ensure that look at this March 2020 paper. Can you see in this March 2020 paper, the examiner has given you the pointers for audit risk? Look at this. So when you write your answer for March 2020 paper, will you compare your answer first with the pointers of the examiner? And if 50% or more pointers matches, that's wonderful and will give you confidence that your thinking and the examiner thinking is reconciling, and that will boost your confidence, right? And yes, absolutely, there is no need to refer to accounting standards, right? No names and numbers of accounting standards, right? You can just see that from the examiner article here. If I just take you to the exam technique article, page number 5. Okay, page number 5. Just read this point here, everyone. I'm giving you 1 minute. Just read this point. There is no marks for quoting the accounting standard, right? There is no mark for referencing to the accounting standard. Just read what the blue box in front of your screen quickly, everyone. No, you cannot just write initially the journal treatment and then connect to the case. Never. You start your answer with a case specific treatment, Abuza. You cannot just waste time. First you write the journal treatment and then you adapt the treatment to the case study. That's a waste of time, right? Yes, the pointers are headings, right? Basically, the pointers are headings. So is everyone read it? So is the examiner saying, is there any marks for reference number of the accounting standard, name of the accounting standard? Will the examiner give you any marks for the name and reference of the accounting standard? I hope all of you have read the blue box in front of your screen, right? And one very important thing where I need to focus on, I just guided you that when you're getting 3 marks, when you're getting a 3 marks on audit risk, right? Or when you're getting a 3 marks on uh, the risk of material misstatement, right? Right. You get 1 mark for materiality, right? You get 1 mark for the treatment, right? And you get 1 mark for risk and impact. The students don't bifurcate between risk and impact, and they take half a mark. Materiality, treatment, risk, and impact. Let me demonstrate that. Look at the answer I wrote here on the amortization, right? Just let me copy this answer on amortization here, and just let me bring the materiality for the amortization license. Sorry. Okay, this is my answer, right? Okay, now be very critical. Risk and impact. We're just spending some time on risk and impact before we end the session. The first line, is giving you how many marks? 1. Okay, that is the first line, yellow, materiality. The materiality, yellow, 1 mark. Treatment. The policy of amortization of license is wrong because the license should be amortized over the useful life, and the management cannot assume a 5-year basis for amortizing license, and the license should be full stop. This is all the accounting treatment, life. This is all the accounting treatment. This is all the accounting treatment. Let's put the accounting treatment in blue. This is the accounting treatment, blue. Risk and impact, risk and impact. Due to wrong amortization policy. What is the risk? This is the risk. Wrong amortization policy. So what is the risk? The risk is the wrong amortization policy. And what is the impact? The impact is expense is understated. This is the impact, right? And the assets are overstated. And the assets are overstated. This is the impact. You need to write the risk and the impact. You cannot avoid it. If you fail to write the risk, you will lose half a mark. If you fail to write an impact, you will lose half a mark. So what basically are risk? What basically are risk? You're all accountants, right? You're all accountants. You're looking at risk in the accounting treatments. What can be risk in the accounting treatments? Number one, the risk can be a risk of wrong classification. A risk of wrong classification. There can be a risk of wrong valuation. I hope you agree. There can be a risk of wrong estimations, evaluation, risk of wrong valuation, a risk of wrong estimates, a risk of uh, wrong recognition, risk of wrong recognition, a risk of wrong disclosures, risk of wrong disclosures, or no disclosures, or incomplete disclosures. So how many risks can be there in an accounting standard? A disclosure, a recognition, a valuation, a classification. Do you all believe these are risks associated with accounting standards? Classifications, valuations, estimates, recognitions, disclosures, presentation, risk of inappropriate presentation. So you need to speak of the risk first, right? The risk of the wrong amortization policy. I wrote the risk first, followed by the impact. So please ensure that when you are concluding your answer, you have a risk and you have an impact. So if something is wrongly classified, what is the impact? If something is wrongly valued, what is the impact? If something is wrongly recognized, what is the impact? If something is wrongly disclosed, what is the impact? So will you be thinking about risk and impact in the last sentence of your answer to score exactly the 1 mark? Is everyone becoming clear on the difference between a risk and the impact? So you need to write the risk, right? Okay, so has this session given you some insights today? We're almost coming to the verge of 3 hours today. So has the first session on business risk and the second session on ROM given you some insights, some clarities? Uh, so how has been the session today? Has it been a good one? Has it really given you some thought process to think about? Obviously, not everything can be covered in these limitations of webinars. Firstly, these are free of cost webinars. You need to realize that. This is a benefit which ACCA Pakistan is providing you. This is free of cost. You're not incurring any cost for that. So obviously, within every constraint, the tutor is delivering a 15-hour webinar and try to focus on the most important things which could be guided in 15 hours, right? So I hope if any of your question has been unaddressed, you can still WhatsApp the tutor, and the tutor will find time to reply to your queries within a day or two, or might be 2 or 3 days, depends, right? Because currently I'm very busy with the webinars. I will be getting free on Saturday, and after that, I probably will get time to reply to your messages, right? But I hope the WhatsApp groups have been created, and I will be sharing this Word file in the WhatsApp group. We have a very, very important day tomorrow, which is about ethical, professional, and quality control issues. Even though I've covered this topic many times, but I will be focusing on quality control tomorrow a lot because I believe I need to give students a very proper clarity on quality control issues because I have focused a lot on ethical and professional issues in my previous webinar. So I will be looking at ethical, professional, and quality control issues in a very different manner tomorrow. So please do join the day 3 tomorrow, which will be very, very important to give you insights about ethical, professional, and quality control issues, right? So just waiting for your feedbacks on the day today. I hope you had a productive day today. You utilized 3 hours, and it was not a waste of time coming to this 3 hour session live. Uh, so thank you very much for the feedback, and thank you very much for participating in this live webinar. You have still 5 weeks before exams. I hope you implement the learnings you got from each session yesterday and today. And tomorrow is yet another important session where I'll come back with ethical, professional, and quality control issues, right? Okay, thank you very much, all of you. Have a nice day. I'll see you back tomorrow live 8:30 p.m. Pakistan Standard Time for day 3, and utilize the next 24 hours very carefully because every day counts towards your exams coming up on 7th of December. I'm signing off. I'm signing off as tutor for this webinar. I'm Kashif Kamran signing off from the AAA Practice to Pass webinar day 2, and I'll see you back with day 3 tomorrow. Take care. Goodbye, everyone.